Hi traders, just a few words before we go into the analysis and the preparation for the week ahead. Obviously this is the last full trading week in 2011, and already in the back end of last week we're seeing lower volumes and smaller moves. But as far as Trade the Easy Way is concerned, going into 2012, just looking at ways in which I can improve the trading room and thinking about how we can make that more flexible to try and make that more proactive in terms of trade setups. So I'll come back to you on that. Probably do a survey, a very quick survey quite soon, just to gather your thoughts on that as well. And looking into expanding the membership to get more of a buzz about the place, to get more interaction. So more news on that. Negotiating with an American company to hook into their resources and use their marketing to expand the membership. Really, with the main aim so that everybody benefits, so that there's much more interaction, much more closer observation of the markets, and just to try and increase everybody's learning skills, accelerate your learning skills. So we'll come back to you on that. In the meantime, I'll keep you posted on what's happening. Wanting to move things on fairly quickly to get into 2012. The Forex course has been completely written. The beginner's course is almost rewritten, and the mentorships will all expand on the back of that. I've got a brand new checklist that I've been working on for some time now, and that will become part of the booster mentorships and the advanced mentorships, and I will release part of that for you for free in the early stages of 2012. And anybody who's been on a booster membership or a full mentorship will see those updates as well, because that's a promise I made when you go into those mentorships. Incidentally, I'm getting quite booked up on the mentorships, so if you are interested in the booster or the full wealth mentorship, then let me know. And I think that's enough said for now. Let's just move straight on in the charts and see what I'm seeing at the moment. Dollar index. There a huge flight to safety at the moment. There's the big move up in the dollar, but on the back end of last week we saw a couple of weaker days which gave some respite in the Dow, but not much. Obviously volumes are already dropping off. This is the last week of 2011, as I said. I would expect this to retest, come down here and retest 80.40, but from there on in, particularly as we get into 2012, I'm expecting a lot more buying pressure in the dollar index, and so there I am. As we go into 2012, I am bearish, increasingly bearish. I mean, these US 10-year Treasury notes are on a strong upswing. A little bit of a breather in October here, but it soon got back on the buying trend, and last week we saw a lot of buying into Friday. So that's putting a lot of pressure on equity markets. Commodities have come down significantly, with the exception of oil. Oil is weak, but not dropping as hard. A lot of commodities, and even gold. The gold as an asset has been sold, and so this is very weak. You can see we've got oversold here and a gap to the 8. So I'm at least expecting a retrace back here to 1631 on the 2 EMA. That 2 EMA, I would actually venture as a good place to get short. Once that gap to the 8 is filled, I think that 200 will become a lot of resistance. I think we might come up here, perhaps consolidate, wait till the 20 comes down, and possibly see further lows. A safer way to play it is to wait and see what happens on Monday. See if we get a reversal bar under here, so you can short the failure of the reversal bar back to the lows. But I think short term, this dollar is in. This gold is in serious trouble, and like I said, expecting greater strength in the dollar and more downside to the gold as we get into 2012. Let's just see where we are as far as that trend line is concerned. So the long-term trend line here was broken. So that will suggest we could retest 1680 up here if this doesn't hold. That would bring us into the 20 EMA. I think the 50 EMA is going to come down by then. So perhaps as we get in the back of the week, we'll see a movement up to this area here and a bounce off of that line for further falls. So sit on your hands as far as gold is concerned. Let's wait for gold to retrace. I wouldn't buy gold. Let's just wait and see if that can move to the upside. Right, let's study the Dow. The Dow is right under this 8 and 20 and has been for 2 days, Thursday, Friday last week, sitting right on the fibs line from the last major move. The last major move being here on the 25th of November, and the high up here on the 8th of December. So to me, this is, on Friday we closed inside Thursday's bar, so not a lot can be had from that, apart from the fact that these highs up here are selling. 11,900 keeps getting touched and sold. It was support up here, now it's resistance. So looking to see if this Dow can, on the back of that reversal bar under the 8 and 20, start now to break this 50 EMA, even in the run into to Christmas. But best way to trade it is to wait until we get a break of this area here. If you're trading intraday, you could just keep shorting the highs and see if you can get a move, a follow through in the intraday charts. You can see from the weekly big sellers bar, but right down to the 8. So we closed above the 8. On the monthly, this is increasingly looking more like a hangman than a hammer. So if we start to drop below this area here, the 50 EMA in the daily, then expect to see an acceleration as we get down to 11.5. So 11.5 on the weekly, and the daily 200 is the target for further selling. And if you look at it on a naked chart, getting the chart up. So look at it on a naked chart. What can we deduce from this? So you've got all this support down here at 11,600. A lot of price action around 11,600. We are selling at the highs here. So a minor respite in the dollar might bring us up, well, only to retest these highs again, and then I would look to see if we can come down to 630 and break down to 11.5. But on a naked chart, that looks most likely. The highs up here were higher than the closes up here, but on the face of it, I think we will see a breakdown of that trend line, perhaps moving in at the apex. The markets are slow, so we might get a little bit of movement here Monday, possibly Monday, Tuesday, and then start. We're edging closer to this trend line, aren't we? I would suspect maybe a quiet Monday and then a sell-off on Tuesday. Who knows? You could even short this right now. You could short a break of Friday's low, 744, because the 2-bar stop means you only need a 170 point stop to see further downside. And whoops, you can see this price action during the session on Friday. Let's just have a look at this before we leave. We sat up there, not doing a whole heap, very slow, and then we just had a lower high here, and then it just broke. So a little tough to trade in that quiet volume. The only thing you could do is keep shorting the highs. Yeah, reversal bars up there. That was at an hour before the opening. So the market's open here. Nope, they open here. Little move up, sell off, little move up, little sell off, little move up, and it just runs out of steam. Not a huge move, and the best way to do it was to watch out for these reversal bars up here. Stay short, keep your stop up there, and if you get stopped out, leave it. Otherwise, stay in the trade. You're risking very little money because that was 895. The stop up there was 910. Very tight stop, and you would have ended up with a move right down to the 750 area. Right, let's look at the oil. Changing the contract now, so we broke down through the 50 EMA, pulled back to the 50 EMA, and a couple of days of selling. Very hesitant on Friday, low volume with the contract changeover. I think we need to wait for the 8 to catch up. I think we may retest that 96. If we retest 96, I think we'll see further downside. The weekly charts suggest you may even see 97, but that will bring us right above the 50 EMA and above this resistance. I think that's unlikely. I think we'll may not even see more than 95.50, 95.40. But we've broken a trend line here, and that was the retest. And now we are seeing further downside, and let's look at the fibs level. Okay, so we're right at the top of the fib zone, but the target now is 90. 50% fibs is 90. So that's what we're looking for. Okay, and you can see on this weekly chart we are close below the 50 EMA. So the pullback to the 50 EMA is 95, and the monthly is looking pretty weak. So that's what I'm looking for there, looking for a pullback to 95.50 if I can. I'm going to trade it intraday, so I'm just going to look for reversal signals up at those highs. Let's look at the beans. The corn and the wheat are not behaving much. The beans are coming up okay. Bear in mind the dollar's so a couple of days of weakness in the dollar on Thursday, Friday. Saw a couple of days of buying in the beans Thursday, Friday. We're right at the trend line. If the dollar starts to get strong again, this could just fail again and roll over. But in the meantime, I would look to buy a pullback to something like 11.25 to see if we get up to 11.77. But if you look at the weekly, the reason why I'm interested in that is because it's suggested in the weekly that we've held the top of this fib zone in the weekly, and the gap to the 8 is 11.60. So let's see if we can get at least 30 points out of that on Monday as we come and grab the weekly 8. Right, let's have a look at some of these dollar pairs. This Aussie dollar is clinging on, so we have a 50 EMA break here, pull back to the 50 EMA on the next day, and so a couple of days of buying just towards the end of the week, which relates to the dollar coming off a little bit off the highs. So this stopping bar had a gap to the 8. The gap to the 8 has been filled and left us with a slightly higher close. The gold is due for a bigger pullback, so that might push this US dollar up further. We might still get a retest of this 101 this week. If you are short from the 50 MA break, you can do one of two things. You could take your profits off now. You could, the better option I think is keep your stop above 105.50, or get a stock to break even. Yeah, I still think we might see a small drop in the dollar index, which will give this a little bit more room to breathe. But I think this US dollar, Aussie US dollar, I should say, I'm still expecting the short side. It may just be that we need another retest of 50 MA before it's ready to go. So stay short. Let's. I would expect this over Tuesday, maybe in Tuesday and Wednesday, to start closing lower. So the stop to break even is the better option to see if that can work out. So the 8 got an 820 cross, nice wide moving averages, so it is looking short. Euro. It's very weak. We're still slightly higher close. Thursday, Friday were higher closes. Coming off this RSI. If we can get any, I mean, just basically just keep shorting the highs if you're a day trader. Otherwise, we may get a move back to 132. If we can get a little bit of weakness in the dollar in the first part of the week, and this can move back up to 132, that'd be a great place to get short if we do. But otherwise, I think this is so weak. I think we'll barely get a touch of 31.40. 31.40 to me is most likely high before we see a drop again. We did make new lows, new recent lows. So I mean, this is the low of 2011 is here at 28.73. So we're very close to that. I think this last week we could easily see that. If we break that, then we're coming down to 126 and maybe even lower. But that pullback there will be great if we can get it. Otherwise, I wouldn't short it. I wouldn't recommend you. I mean, swing trading, I wouldn't short anything as low as that. No way. But intraday, I would just wait for 60-minute charts. And you can see on Friday, or back in the last week, nice reversal bar up there with a gap to the 8, and which I didn't take, I have to say. That was at 2 o'clock. But that was a bit of a miss, because that gap to the 8, at the very least the gap to the 8 is going to be filled. If you're very patient, you got right down to 130 again from 130.60. So it's a very small move, very small move. And the Aussie US was equally difficult to trade. It didn't close above the 8 until 3 o'clock UK time. And even then only gave a small lower move. So you can see a lot quieter volume. The pound got a bit of a shot in the arm at the back end of the trading. Again, look at these gaps to the 8. These bars are floating. So it's tough, because I mean that could have just come up and touched the 50 MA and just dropped. It could have been a bearish consolidation. That's why these markets are quite tough in these low volume periods. We look at the day chart on the pound. It's much stronger than the euro. Came up into a couple of days buying on the back of this little reversal bar down here. We are potentially, there is something of a W pattern forming here. You can see, that's this little move back to 50 MA and drop down a couple of days of buying could mean we're about to see more upside on that. But I would be very surprised if the pound can close above 156, but I would have to change my thinking if the pound can change above 156. I think you may see a retest of the 20, 156.15, or that'll probably drop to 156, at which stage I think we'll see further downside. But I would look to short the highs. If you get any reversal signals at the highs in the pound intraday, if you're a day trader, I would short them. The only setup I can see for a swing trade is back to this good old Euro New Zealand. I called this Euro New Zealand a short when it was up here. I actually, when we got to this support down here, 73, I took it off. I took profits at 73. If you waited a very long time, you would have ended up with 71, but I don't see the point of that. But now you can see we've got this big daily trend line and a huge sellers bar on Friday, huge. I think if we get a pullback to 71.90, I think we may even get down right down to 65. To me, that's a big, by far the best swing trade up there. The pound CAD has put in a buy signal, but I think the resistance is way too close, and I'm not prepared to take the risk on that. Mind you, if you get a pullback to 60, 70, the stop's only, you need the 80-point stop under there at 59.90, so that's not bad. Otherwise, I'm just looking to see if the euro can retest the 8 and drop. Looking to see if the pound can test 156. And looking to see if the Dow is going to break the 50 EMA on the back of that little reversal bar under the 8 and 20 I showed you, and looking to see if the Aussie can come back to 50 EMA. Okay, so in these quiet last remaining days of 2011, not a lot to do, but I really think, let's just finish by looking at the Dow. I really think this Dow is showing really weak signs, and let's look at, and I think as soon as we start to break that trend line, which that little reversal bar on Friday looks as if we could, with the highs selling, I think we're going to start to break down through the 50, and we could already start to see some drops. If it doesn't happen in 2011, I do think these highs will get sold in 2012. Okay, I'll keep you posted, and any questions, let me know. Your feedback is always very, very welcome, but I'll try and get more feedback from you in the form of a very, very quick survey. Okay, hope that helps, and see you. For the full members, see you at the Monday Traders Roundtable, and I will pick a specific topic to go over on that one, and so we can get the most out of that, as well as looking at the markets. And so see you then. Thanks. Bye.